Welcome back. As stock markets in North America have soared over the past 3 months, investors have piled into exchange-traded funds. Let's get insight from our next guest. She's Valerie Grimba, Director of Global ETF Strategy at RBC Capital Markets. And as you can see, she's in studio with us today. Good morning, and thanks for being here.
Thank you for having me.
So I'm seeing from some of the work that you've done, U.S. ETFs saw the second highest month on record this year in June. We're talking about June numbers, so numbers just the month just completed. Canadian ETFs had inflows that ran above the monthly average at nearly $10 billion. Is that what you expect when markets are on fire, to use a colloquial term, when markets are surging higher?
Absolutely. I think this is definitely a reflection of the underlying strength, but also just kind of improving sentiment for the vehicle and ETFs becoming a vehicle of choice here. And it's really incredible. I mean, S&P 500 is up nearly 10% in the last 2 months. So you're right, markets have been on fire, and we kind of expect this fund flows activity to follow. But it has, I would say, be even stronger than expected, just kind of given volatility and other things looming under the surface and headline noise.
Okay. Nearly 150 new ETFs launched so far this year. How does that number compare to historical launches of new products?
Again, new ETFs are coming at us rapid fire, rapid pace. 148 new ETFs here in Canada alone. I think the number is 360 new ETFs in US year to date. And in Canada, to give you an idea of magnitude there, it's about 50% more than what we saw last year. And last year was itself a record-breaking story. So again, we're seeing kind of increased sophistication coming through in the ETF wrapper. You know, these aren't your grandmother's ETFs anymore. Right. It's not a passive index story.
Right.
50 of the new ETF launches here in Canada deploy a derivative strategy, and 44 of them deploy leverage in some fashion. So again, this is just about getting more sophisticated investment strategies within a one-ticker solution.
Leverage is magnifying returns, correct? 1 times leverage, 2 times leverage. We often get cautioned about those ETFs by experts, telling investors they need to watch them every day or so. What are the other type of ETFs that you mentioned? Derivatives.
Yes.
What kind of strategies are there?
See, a word we use here in Canada is an enhanced strategy. So enhanced, they use a quarter turn of leverage. So that's only 25% leverage. So even a fraction of 1 times. And they apply that to the strategy and also use a covered call strategy. So they are selling vol, they are selling calls to generate income, additional income for the investor. And so we've seen those become very popular, and also in the U.S. as well. They've always been popular here in Canada. They're relatively new in the U.S. market, but June saw $7 billion of inflows into derivative-based ETFs in the month of June alone. And I think that kind of talks to kind of market narratives as well. Bullish, certainly, but also a little bit of uncertainty, and derivative strategies also kind of sometimes put some protection levels in place, and again, a focus on income. So you're kind of getting both sides of the story there.
Do you have any insight at all on how many ETFs were wound down, how many ETFs ceased to trade? Because that happens too.
Yes, exactly. And we have seen that, I would say, increase over average levels, but it's just kind of a reflection of more products in the market. So it's just natural attrition there. And, you know, issuers themselves, they don't really love to close funds. They like to merge them or combine strategies. So we see more of that happening instead of just full closures.
And I see also that there were new ETFs launched in Canada, about half a dozen, that are CLO ETFs, collateralized loan obligation ETFs. Yes. That's been a big hit, I gather, in the United States, correct?
Yes, exactly. Phenomenal growth in the CLO ETF space. Again, it's about democratizing investment strategies that were out of the reach of advisors and individual investors. Before, you needed to be institutional-sized investor to access the CLO as an asset class. Now you can do it with an ETF, and we saw 6 issuers here in Canada launch their own this year, and they're off to a phenomenal start, over $100 million combined into these CLO products. They offer you a little bit more yield for a little bit less risk. It's a very compelling story, but we do recommend investors do some due diligence here too and understand what they're buying.
And Canadian ETF investors are different than US ETF investors, at least in one big way, and that appears to be Canadian ETF investors much more willing to look outside North America to place at least some of their invested funds, correct?
Yes, I think it's a really fascinating story, and you know, everyone has a home team bias, everyone has a domestic bias, And so we've seen U.S. investors stick with the U.S. exceptionalism story. They think that's where the growth is. But in Europe and in Canada, we've seen a strong preference to international developed market equities and away from the U.S., kind of at the expense of their U.S. exposure. And so this has just been a continuing theme. Every morning I come in, it's just more and more buying of international equities. And they've outperformed this year as well. So it's kind of twofold. And we think there's a lot of tailwinds going for owning international equities as well.